This is the SPCE one-year overview reading for the year of 2024. It's currently July 6, 2023, 6:43 p.m. Eastern Time. SPCE at the time of this reading is currently $3.68.5. That's USD. And the shuffle file for the SPCE reading for 2024 was created on June 27, 2023 at 8:29 p.m. Eastern Time. That's this video right here. So this is a tricky year. It's pretty mixed, guys. We've got a overall theme that first starts out to be bullish. We successfully turn resistance into new support. It looks like coming out of the rally in 2023 at the end of the year. We see the high twice, probably here in July and then here again in March, or on the cusp of February, March, with the higher probability of it being in January. And we may see it again in August, but it gets pretty mixed after seeing these highs. We get into price swings. There's a high probable location here in early June where we might have a lowest low, and a really strong probable location. The strongest probable location is here in October. This is where I think is on the cusp of October, November. But there are correlations here in August. There are correlations here in June. And it's going to be price swinging. So we might actually see the low more than once. We probably see the high more than once. It's price swinging. So between resistance and support, and you can see in 2024 we have a rally that offers opportunity to open up a short position, and then there's sideways rotation, tricky back and forth behavior with the prudence card here for 2024. And then we end up in a low, or a significant trough, I should say, in 2026. So we want to be careful, guys, but there's opportunity here to make money because there's a lot of price swinging. And it looks like towards the end of the year, into 2025, we decline to revisit a support level that we recently met once before. I think we may see this resistance, bumping along resistance kind of going on here throughout the year. And we may see highs again throughout the year. It's possible. It's really difficult, guys, because there's a lot going on and there's a lot of sideways behavior, and when that happens, it becomes very difficult to get highs and lows. But with that said, the overall week by week behavior of the SPCE chart should be pretty on point, give or take about 2 weeks here or there wiggle room, because not every card is going to line up perfectly with 2 weeks of activity. It just doesn't work that way. Behavior around the highest high for the year, also out of a decline, we have a fast sudden move higher taking us to a highest high, and then there's also a sharp drop off of the highest highs with that unicursal energy, which is also a cross reading congruency in a way. We've got unicursal taking us down to lows, and we've got unicursals near the highs here. So these might be highs that we see in 2024 before notable lows in 2026. Behavior around the low, out of the lows, there's a big move to the upside, reaching for distant resistance, almost irrational moves. So when we're looking to pinpoint lows in real time, we're looking for that type of behavior out of a lowest price level. And again, we might see that more than once based on the fact we've got these price swings. And the reason why I say we may see more highs here at the end of the year in the midst of these lows, like back and forth highs to lows, is because we've got the success card. So usually you end the reading with the trend direction, which would be to the upside. So it may be that here at the end of the year, we have a pretty big move to the upside. All right, so in early January, there's a key price level at resistance that we highlight. I think that's probably where we see the highest side. The January low will be within close time proximity to a highest high for SPCE, and we should drop pretty hard off of the highest high into the low. It looks like a lot of price change is covered when we meet the high in early January. A lot of price change to the downside taking us into a low. It looks like probably on the cusp of January, February. There's a notable trade opportunity there in January that involves that key resistance or that key technical price level. It'll be where we want to open up a short position before a significant drop, and we would close that short position around the cusp of January, February, or early February. There is a fast sudden move higher that marks the end of a period of volatility taking place in late January, and the fast sudden move higher out of the trough there on the cusp of January, February, along a diagonal trend line, breaking through horizontal resistance to meet a second resistance before pulling back to somewhere between those two price levels. And it looks like we go from a significant trough on the cusp of February into kind of mixed behavior around the high. It's really mixed. We rally into like a high probably somewhere around mid to late February, and then we decline off of that pretty notably through multiple support levels there in late February. The low of February forms first from a peak that then declines sharp, or notably on a 1 year chart it would stand out. There's a really significant trough here We fall pretty hard from like mid-February into the cusp of February, March, and then do sideways rotation in February, March. This is a cross-reading congruency card. When we look at the 10-year, we've got the prudence card for 2024. So this is probably some really tricky behavior. We go from like a significant trough back to a high because we see the same price level. It's most likely the same price level. It's associated with the 2 of swords, the 4 of swords. So there's a lot of similarities there, similar energies. And we also had a highest high correlation here as well. So what happens is we probably have some tricky behavior in early March, and then we rally along a diagonal trend line with this like unexpected move out of a scary situation, this unexpected move to the upside out of the March low to revisit the highs of the year here towards the end of March or mid-March. Rally along a diagonal trend line that ends with a fast sudden move higher and then a breakdown through that diagonal trend line with increasing volatility on the way down. There may be a speaker in mid to late January. If it's not mid to late January, like some speaker is actually telling something like that's not truthful here around January, like the end of January, and if not the end of January, then maybe March. We go back into a significant trough in the end of March, added the decline that started in March off of the March high, and it continues into April. There's a big move from the bottom of a range all the way to the top of a range. We have a peak that forms at the end of April. That the abundance card does have the possibility of being a high again, but I think it's probably just a significant high or a new high after forming new lows. Matter of fact, it's a key resistance level that we've come up against many times before there in April at the April high. So it's possible we see it again. It's a lot of mixed behavior going on here. It's even possible we have another high somewhere around here. It's really mixed, guys. So it's very, very difficult to determine the highs and lows. What I would do is I'd make sure to be following the sequence of events and prepare myself in preparation for a decline to revisit a support level in 2025. I think we'll probably be in the midst of like a decline into this low that we see here around 2025, 2026. And remember, there's going to be significant drops, unicursals to meet the low. The lows of the 10-year period form from a failed attempt to break through key resistance and then a decline into through key support. So there's mixed behavior going on here. And we probably decline like into the lows there around the cusp of 25, 26. That's what that looks like to me. You know, before we go any further, let's take a look at 2023 and see how we're doing thus far. So we had a peak here in early February, opportunity in late February to open up a a short position in the midst of a decline before we have a significant trough, a significant crest and a significant trough in March as indicated here, and this is where it got a little screwy. We were expecting around the cusp of April, May there to be a highest high. It didn't end up being a highest high. It did end up being a peak in May, and then we had another prominent peak in June as indicated here. So we were a little screwy on like the end of April, May, but aside from that, pretty solid. And it looks like we've gone in late June, we declined. We had a rally that ended with a fast sudden move higher and then a decline through that diagonal trend line with increasing volatility on the way down. But we should have here in July reversal and a rally into August. It looks pretty solid. Aside from a little bit of being off here, we still saw a peak. It just wasn't a highest high. Pretty solid there. Okay, so we have this peak or crest at a key resistance level that we break through momentarily and then we stay above it. Briefly, we break back down through the same price level shortly thereafter. A lot of mixed behavior, like back and forth around the April low there. And it looks like the April low's probably towards the beginning of the month of April. Come out of this decline off of the peak into May, and there's a sideways fluctuating rally that precedes a decline. We pushed the upper end of a range higher in early May, and it doesn't look like it holds. It looks like we end up being bound by that range after just pushing through it for a bit. Either that or there's a highest high there. I mean, there could be another highest high there. It's possible. But I don't think so. So I think we break through momentarily and then we break back down through the same price level. And May's trough or May's low forms around the cusp of April, May. We have this high where we push the upper end of a range higher. We push through a resistance that we've seen many times before. We stay above it briefly. We break back down there through the same price level. There's a decline into a trough like early part of May in that sideways fluctuating rally out of that trough. We're bound by the upper end of a range in late May. And then in June, we have a rally that offers an opportunity to open up a short position in early June. The June low forms with a U-shaped dip near the intersection of two perpendicular diagonal trend lines. We've got this failed attempt to break through key resistance in late June, followed by a decline through key support. We revisit a support level near the June high, and there's a sharp drop off of the June high as well. The failed attempt to break through key resistance in the June high, followed by that decline. That decline takes us into a trough around the early July. There's a notable reversal in early July, and a lot of price change around the low. The July low is within close time proximity to a prominent crest or peak for the year. It's not a highest high for the year, but it'll be a prominent crest or peak within close time proximity to the July low. And the price level near the July low is going to be a good mean point for straddle or strangle, where you open up puts and calls on both sides of a price level. That would be a good mean level, somewhere around the price level of a resistance level that's near the low. After a sharp drop, you could probably put on the long position and close the long position in early August before the sharp decline, and close the short position in late August. If not in late August, then you could close the short position around the cusp of October, November. Decline off of the high, where we may have another close to a highest high here in early August. The decline off of that offers opportunity to open up a long position. We revisit that decline, it looks like, again in early September, where we have this failed attempt to break through key resistance followed by a decline through key support. It's resistance that we tested once before. Most likely we tested it at the peak or crest here in August. Technicals will lead us to believe that we're going to break through it, but instead we have 3 pokes through the same price level and a sharp drop off of that third poke, declining through the falsely established support from just earlier, maybe in August somewhere. Hard to pinpoint where the month's low there for September, but off of the month's low for September, there's a big move to the upside. We first rotate sideways along the low, establish support, then there's a big move to the upside, sending out on a multi-day, and then we establish support again at a higher price level near some multiple failed attempts to break through key resistance towards the end of September, and we rally into a peak or crest in early October that we break down from a consecutively lower spikes up on the way down. There's a prominent peak or crest there for the year, as well as most likely location of a lowest low for the year there on the cusp of October, November. But there's a prominent peak or crest there that forms after a big move to the upside, and then a big decline off of a halted rally to a low for the month of October, a unicursal kind of decline on a multi-day kind of scale. We have a low, it looks like towards the end of October on the cusp, and when we're attempting to establish support in late October, you could open up a short position, close that short position in the midst of a sideways fluctuating decline in early November that precedes a notable rally. We have like this fast sudden move higher, takes us to a high for November, especially towards the end of the month. There's a big move to the upside. Mid-month off of a peak or crest, there's a little bit of a decline there, so be careful, but then we have a fast sudden move higher back to the upside after we meet a support level that's important on a multi-year kind of scale. Sideways fluidity along support in December, a fake out near the high. You could open up a long position in the midst of that sideways fluctuating decline and close a long position after a fast sudden move higher in late November. And then there's another trade around December, but it's a little unclear. There's a fake out near the high of December, and then a decline that increases with momentum as we enter into the following year of 2025. This card was also a cross-reading congruency. It was the sneak preview card from 2024, giving it extra prominence. We likely see this big decline, and that takes us to a low here in 2026. We probably see it start early in 2025, it looks like, or it's mixed. It's actually probably mixed in 2025 based on the Queen of Cups. We also revisit a crest in December that in the midst of some erratic behavior back and forth, we both formed the low for December, and we also revisit a crest that was recently a past opportunity. So we may see the crest that formed in November from that fast sudden move higher. We may see it again in the midst of some erratic behavior back and forth through the same price level in December, but be careful, there's that decline there. So you want to be into a short position in the midst of this fast sudden move higher in November. I position myself into a short position. If I was going to do like long-term short position with like options or something like that, I don't know if it's a good idea. They call it short for a reason, my friends, you know. But I definitely want to be positioned, not in a long position going into 2025. And that's SPCE for 2024. And as always, make sure to follow that rule of karma. It's super important for the channel. You do so here on the resources tab of our website, Tarot for Traders, where we ask that you donate 5% of the profits forward to one of these charities, 5% of the profits back to the channel, and that leaves you at 90% of the profits. Make sure to spend that money out of love. As long as you spend that money out of love, the universe is going to send it back to you tenfold through this channel. If you're interested in seeing more SPCE throughout 2024, we offer a monthly subscription to SPCE, which you can get here on our services SOMeta Post portion of our website, Terra for Traders, under monthly subscriptions. Click here to order, and you would scroll down to SPCE, subscribe here. One of the best ways to support the channel, and it gets you trade information similar to the trade information we have in this 1 year, which is normally not public information. That type of trade information you get every month with the paid version, and it doesn't come out on the public version. Really great way to support the channel. I highly recommend it. Thank you, my friends, for supporting the channel. And with that said, I'll see you guys on the next one.